payment will increase in 2023, 2024, and beyond. Welcome back to the channel. This is Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. We got my guy Tukes Productions here with us today, as always. This nigga didn't say nothing. He just smiles.
Because you normally don't introduce me so soon, but.
Well, yeah. I know. We're trying things differently now. Who cares?
Okay.
All right.
Straight to the point today, huh?
So we got to get to the point.
I like that.
All right. So let's talk about why your mortgage payment is going to increase. I asked you this question offline.
Yeah.
I'm going to ask you the question again.
Okay.
Do you know what an escrow account is?
Does it have anything to do with business at all?
No.
Okay, because I always thought that had to do with business. Because I heard Nipsey say it in a song.
Yes, it does have to do with business, but escrow account pertaining to your mortgage payments.
No, I don't.
All right. So for those of you who don't know what an escrow account is when it pertains to your mortgage payment, an escrow account is how the bank is managing your property, your real estate property taxes, and your homeowner's insurance policy. Now, I'm bringing this up in this topic today because every single month, I feel like I get a call from someone who is distraught because their mortgage payment went up by several $100s or thousands of dollars.
Thousands?
And they say, Matt, I have a 30-year fixed rate mortgage. Why is my mortgage payment going up? Well, the easy answer is because your escrow went up. So your mortgage payment is comprised of three components.
Okay.
Right? It's the principal and interest.
Principal interest.
Which gets paid to the bank.
Right.
Right. For you borrowing the loan. Principal pays back the balance, and the interest is the bank that the money makes.
Okay.
Right. Your property taxes and your homeowner's insurance. We call it PITI. P-I-T-I. Type PITI in the chat, please. P-I-T-I. You with me so far?
What does it stand for again?
Seriously. I just said it.
Just say what it stands for. Dude, I'm a very slow learner.
Okay.
And I have no shame in that because I'm sure there's a ton of people who are.
Okay.
Once I get it, though, I get it. So one more time.
PITI, P-I-T-I, stands for principal, interest, taxes, and insurance.
Copy.
That is your mortgage payment. So when you get a mortgage statement, your payment, let's just say, is $3,000 a month, for example. And if it includes your PITI, full PITI, that means that $3,000 is being broken down. Probably $2,000 of that is going to your principal and interest payment. And $1,000 is being divided between the property taxes and homeowners insurance. Let's just say $800 for property taxes monthly and $200 for your homeowner's insurance.
Okay.
Now what happens is property taxes are not due monthly. In most counties around the country, let's just say it's due quarterly.
Okay.
Sometimes it's due semi-annually, right? Which you're paying it twice a year. Or some places it's yearly. But the most common is due quarterly.
Okay.
Your homeowner's insurance is due annually. So when you buy your house, you, the homeowner, have to pay in full your homeowner's insurance policy. The bank is still going to collect an escrow deposit to cover, let's just say your homeowner's insurance is $2,400 a year.
Right.
We might cover, say, you know what, we're going to collect 3 months, $600 up front.
Right.
To start your escrow account with. And every month you're making your mortgage payment, we're going to put $200 into this escrow account that we're managing. And then when the bill is due at the end of the year, we'll pay that in full to cover the following year.
Okay.
And every single month that you're making your mortgage payment, that escrow for the property taxes is being saved. And then when the tax bill comes, the bank pays it.
Okay.
So every single year, the escrow analysis is done on the property. Now, when you get your escrow analysis, most people don't pay attention to it. because you'll get it in the mail. And well, before I go to the escrow analysis, every single year you'll get your house will get assessed by the town that you live in.
Okay.
And 9 times out of 10, no one's paying attention to that mail that comes from the county that shows what they think your house is worth. See, your property taxes are based on the value of the home that the county assesses
Annually.
Right.
Right.
So they'll say for the tax year of 24 to 25, 2024 to 2025, your house, in our opinion, is worth $800,000.
Okay.
So we're going to tax you X, Y, Z percentage. Some in every county is different of their tax rate.
Right.
Right. It could be 1%, it could be 2%, it could be 3%, it could be 1.5%. So wherever county you live in, ladies and gentlemen, Google what your tax rate is and you can just Google it. What's the tax rate code for property taxes in Nassau County or Suffolk County or Queens County, Kings County, Fulton County, Georgia, like, you know what I'm saying?
Yeah.
And you can get what your tax rate is. So most people are not paying attention to that assessment. Most people just throw that stuff away because it looks like junk mail. Right? So I highly advise everybody, when you purchase your home, please look at this assessment that the county is sending you, because they're telling you, hey, your taxes, I know when you had this house last year, your taxes would pay $10,000 a year, but your house went up, in our opinion, so now your taxes are $13,000 a year.
Is that based on modifications done to the house, or just
whatever they feel like your house is worth in this market?
Wow. Okay.
They're doing their own assessment, and it could be because you improved it, whatever.
Yeah.
Right? Like Garland Gardens, my taxes are going to go through the roof once I get reassessed.
Got you.
Because it's not the same house.
Yeah.
It's a completely different house with all types of new shit and square footage and everything. So when you get this reassessed, and let's just say it went up from $10,000 to $13,000, now what happens? It's a $3,000 difference, or $250 a month.
Yeah.
So now when the bank gets the new bill, they have to do what? They have to pay those taxes. Even if you don't have the money in your escrow account at that time, the bank will still pay those property taxes, because property taxes are first lien. If your property taxes are not paid, the county can foreclose, and the bank can lose their investment. So they're always going to pay the property taxes, no matter what the cost is. Even if you're not making your mortgage payments on time and you're late 3-4 months, they're going to make that property tax payment.
Gotcha.
Regardless.
Okay.
So when people see that their mortgage payment went up, it's because 9 times out of 10, it's because the property taxes have increased. Now, what has happened over the past few years? Home prices have been up and stuck, ladies and gentlemen. 20, 30, 40% appreciation. That's the gift. Equity. The curse, property taxes have increased significantly for millions of people across America, which in turn makes their payment makes their payment higher and less affordable, because their property taxes have increased. So we love the appreciation, but we have to also understand, guys, what comes with appreciation too. And that's an increase of your mortgage payment, because your property taxes go up. Now look at homeowners insurance, right? Think about what's happening in the homeowner insurance. Think about all the natural shit that's happening with the weather. Fires, floods, things like that. Some places are becoming uninsurable. Look at Florida. I mean, Joanna, shout out to Joanna. She wanted us to speak about insurance in Florida for years, right?
Who?
Our producer, Jordana.
Oh, Jordana. I think you said Joanna. It sounded like you said Joanna.
Oh, my bad. I'm tripping. Jordana.
Yeah.
I said Joanna?
Yeah, it sounded like you said Joanna.
I'm tired. Sorry, Jordana. My bad. Maybe it did sound like that. But Jordana wanted us to talk about homeowners insurance, because in Florida, the price of homeowners insurance have skyrocketed, right? For various different reasons that I'm not going to get into today.
Right.
And that has increased people's mortgage payments as well. So that's why I kind of wanted to have this conversation today, to let our audience know, because a lot of these people are first-time home buyers, first-generation homeowners, and people, especially when you're buying at 7% interest rates. And this takes us back to our conversation yesterday too, where I was like, if you can't afford the house, don't buy it.
Yeah.
Because you're buying at a higher price, you're buying at a higher interest rate, which means that you're buying at the higher price. That means you're buying at higher property taxes also. And now, next year, even if you are refinancing, the money you think you might save may not be saved because your escrow payment will probably go up because your home has still appreciated. Even if you're appreciating 3 to 5% in equity, it's still appreciation, which means there's a great possibility that your property taxes can increase as well. So you have to pay attention to this when you're buying a house. Also, here's another thing. You guys got to pay attention to when you're buying property and you're looking at homes for sale. Make sure that the taxes that are being advertised with that listing are accurate. Because sometimes people will have exemptions. Like if you're military, if you're a pastor,
Mm-hmm.
if you're disabled, certain counties will offer discounts on the property taxes. And sometimes I've seen these discounts being advertised like, hey, this property has low taxes for the area. Da, 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 da. It's only 7,000 when the whole area is probably like 12,000.
Yeah.
And people will say, oh, this taxes is low, my payment is low. That means the current homeowner have those exemptions. Those exemptions don't carry over to you.
Yeah.
Because if you're not disabled, if you're not a veteran, if you don't meet the qualifications of why that homeowner has exemptions, then you don't get it. And people do their numbers sometimes based off of that. I've seen times when we get deals in contract, our appraisal's done, then when we get the title report back, which shows us what's the accurate taxes, the numbers are completely off from what the listing presents, and there's nothing you can do. Like, it's nothing you can do because in every listing it says buyer must do their own due diligence. You know what I'm saying? So it's not like it's not like you at a store and you buying something that's advertised for sticker and you think, and they had the wrong sticker price on it. It's like, yo, you got to honor this now.
Yeah.
No. This ain't one of those situations. This is, oh, we're going to redo the numbers. And it's either you afford it or not. So you have to really pay attention to all of this when you out here shopping for homes, and then after post-closing, when you purchase your home, you guys have to be prepared for your mortgage payment to go up every single year. Because when you have a 30-year fixed rate, it doesn't mean your mortgage payment is fixed for the life or for 30 years. It means the principal and interest payment is fixed because it's tied into that interest rate.
But the T and the I aren't.
The P and the I is,
Yeah,
and the T and the I ain't.
right.
So, any questions?
No, that was pretty clear to the point. Now I understand what that means. But what I'm trying to figure out is, if your payment always is going to always go up, is it happening more frequently now as opposed to, let's say, 10 years ago?
Absolutely, it's happening more frequently now because what has happened over the past 3 to 4 years, home prices have skyrocketed.
Yeah.
So it's definitely happening more now, but this is something that happens every single year when you are in an appreciating market. Mm-hmm. Now, here's the flip side of the coin. If the market depreciates,
right,
then technically your taxes should go down a little bit.
Right.
And that has happened I've only seen this happen during the Great Recession.
Okay.
When market crashed, then property taxes went lower, right? Because the assessments were lower. Now, here's another thing I want to tell you. Every county has a process. It's called, you can grieve your taxes.
Okay.
So if you get your assessment, let's just say they'd say your house is worth $800,000, but you see the comps are saying it's worth $650,000.
Right. It's a
big
difference.
It's a big difference. And it's never really that significant. I'm just using this as an example, right? You can now grieve your taxes with the county.
What do you mean by grieve?
Basically, hey, your numbers are wrong. My house ain't worth $800,000. My house is worth $650,000. Here's some comparable sales. Hell, I would get my own independent appraisal. Look at this. It's a whole process that you have to go through.
Okay.
There's a lot of companies out here that you can work with and hire, and they can grieve the taxes on your behalf,
Mm-hmm.
and they'll charge you like a percentage of what they save you. So if they save you $1,000, they may charge you $300 for their services or something like that. You know what I mean?
Is it worth going through something like that to
It's a gift.
offset?
It's a gift and a curse, right? Because you could be opening Pandora's box too, right? So let's just say, like during this high appreciation time, I tell folks don't even waste your time grieving your taxes, because 9 times out of 10, the assessment is going to be lower than what the market value truly is.
Mm.
Right? Because it's two different. The way the towns assess and way an appraisal is, it's the same, but it's different. They always come in a little bit lower than what true market value is.
Who comes in? Which one? Oh,
The assessment will come in
assessment.
lower.
Okay.
True market value might be $50,000 to $100,000 higher, 50,000, 70,000, 25,000, whatever, right?
Mm-hmm.
But the assessment, from what I've seen, even just my own personal properties, is always lower.
Okay.
Right? So if you're grieving your taxes, you better have a good case. Because if you grieve them and they actually can find your house is worth more and they underassess you, and that could raise your property taxes
Oh,
more.
I see. So because they already underassessed you, then there's no reason to open up, more issues, and kind of, because you're basically saying that they're already giving you a less than market value on your house.
Exactly.
Basically. So there's no need to keep fighting that and try to get anything lower.
Exactly.
Got you. Okay.
Exactly. So you got to be very mindful of when you're trying to do this grieving process, that you really have all your ducks in a row.
Yeah.
And I would recommend hire a professional who specializes in this. There's companies that grieve your taxes. There's property tax attorneys that can grieve your taxes. Just make sure you get all the information possible before you start the process, because you don't want to open up Pandora's box, quite frankly. Right? So, again, this is the reason why your mortgage payment will increase in 2023, 2024, 2025, and beyond. This is something that we have to take in consideration. Even if you go to refinance, let's just say interest rates drop to 4% in a couple years. You're locked in at 7% right now. You might save 3% of interest, and it could lower your payment overall.
Yeah.
But maybe not as much, because from the time you purchased the house to what is valued now, your property tax can increase by several $1,000s over that time as well, which will eat up some of those savings from your refinance. So again, this is why I was saying yesterday, make sure you can afford this bad boy, because homeownership is expensive.
Yeah.
It's expensive. You get a lot of benefits of it, obviously, but we have to, if we're going to talk about the good of ownership, investing, we got to talk about the bad at the same time. So this is the bad.
Is there anybody who can, does military pay taxes, or they pay less? Like, is there anybody who doesn't pay taxes, or?
Yeah, there's certain situations where you have military folks that won't pay taxes. Like we have someone in OM 648 says they don't pay property taxes. They're probably disabled military, I'm not sure. OM 648, are you disabled military? Tell us in the comments why you say you don't pay property taxes, so the audience who's watching this on the live with us can have a better understanding. But in some of those cases, that's what it is. You know what I'm saying?
Yeah.
You can get heavily discounted taxes. Like I know in certain counties, if you're like a pastor or something like that, they'll give you a discount.
Okay.
If you like sometimes they'll give you exemptions on like your school taxes if you qualify for certain programs. They got like homestead exemptions. So there's certain different things out there that you can save money on your property taxes.
This is on all properties, or this is just primary residence?
Primarily for primary residences.
Okay.
For investment properties, there's really not too many savings out there.
Okay.
Or programs. OM 648, veteran, 100% disabled. Thank you for your service, and thank you for watching. OM 648, we salute you. All right. But yeah, for investment properties, you really don't see. Now, there's also tax abatements, right? So when you see new development, like especially a lot in like Manhattan and Brooklyn, they'll say the developer got tax abatements from the city for building a development project, a condo project or something like that. And now the developer can pass off those tax abatement savings to whoever purchases in the building. And those abatements could be 5 years, they can be 10 years. It just depends, you know.
Oh, I see.
Like, and that happens like in new development construction. That happens in like, so I've even seen in certain counties because they want to promote development and investment to regentrify and stuff like that.
Right.
So they'll promote tax abatements for the developer or the builder, and those things can be passed on. But those abatements are for a certain period of years, usually like between 5 and 20 years, just depending on the entire situation.
And tax abatements is what exactly? What is that?
Basically, the county or the city is giving the developer or the builder an incentive to build in that area.
Right.
So they make their property taxes cheaper, basically none, because you're building in a area that they want to redevelop. So like Brooklyn, for a prime example, look at Brooklyn over the past few years. Like Brooklyn went through a whole gentrification, I would say, over the last 15 years.
Yeah.
It was a lot of Brooklyn was bang, bang, shoot 'em up in slums. Right. Now you can't even think about moving in these areas. Right. Like look at Williamsburg. Look how much they developed Williamsburg, Brooklyn, for example. Williamsburg, Brooklyn was nothing 15 years ago. Warehouses, it's not where you wanted to be, but it got some of the best waterfront views. Now look at what you see in Williamsburg, Brooklyn. You have some of the high-rise condos, penthouses. It's like all artsy, but a lot of those buildings came with tax abatements. A lot of tax abatements to get development to go there, developers to go there and build, and now those homeowners are enjoying these tax abatements with cheaper taxes, but at some point they're going to expire.
So when they expire, then the people who live in there have to pay more?
Yeah.
Okay.
Yeah, you go to market rate now. So after your abatement is over, you go to market rate.
Is that why when new developments like first open up, it's usually cheaper to get people in there, or it's just because
it's both. It's right to get the developers to go in and develop and get the buyers to go in there to buy.
Yeah, the prices always go up on those.
Absolutely.
Always.
Absolutely. It's gonna go up.
Yeah.
It has to, right? So there's a lot of factors that comes into play when you are buying real estate. And you have to account for this. If you are a home buyer, especially if you are penny pinching to purchase a house, you can be setting yourself up for failure. This is why I always speak about don't be house rich and cash poor. Because at any given moment, that new mortgage payment comes in and say, hey, we just paid, you have an escrow shortage of $5,000 or $3,000. Now your mortgage payment increased by that difference.
Yeah.
It's due immediately. You know what I'm saying? Like, it's a lot that comes with home ownership. That's why I said it takes a certain level of maturity, discipline, financial stability. You should never buy a house if you're not stable, financially stable.
Makes sense.
Sometimes it's good just to wait it out.
Yeah, it's a lot, man. The more you talk about this stuff, the more I realize I'm like, oh, this is crazy.
It ain't crazy. I will still own versus rent.
No, yeah.
Any day of the week, because you know what else increases every single year? Your rent.
Rent prices, yeah.
3 to 5%. You just not, you know why it increases? Because ownership expenses increases.
Yeah.
So who's paying for it? The tenant.
That's a fact.
So it's like you pick your poison, because you're damned if you do, you're damned if you don't. Either which way, you're going to pay more money. So what side of the fence do you want to be on? The ownership side or the renting side? And there's nothing wrong with either. I tell you guys, I rent right now, right? I own also.
Mm-hmm.
But it serves a purpose.
Yeah.
Me renting right now serves a purpose until Garland Gardens is done. Then I can move in and get rid of this rent because it doesn't serve me. It serves a purpose of shelter, but I hate paying it every month.
Yeah.
It annoys me. But it may not annoy you.
Nah, I would definitely want to live in a spot like that for sure.
For sure. Do you want to pay for it though?
I wouldn't mind paying for it because I mean, for me, I just I would want to be able to walk around and do whatever I want to do and not feel like I'm in a house I don't want to be in. Yeah,
but you got to look at it though, man. Like all of this shit is the gift and the curse at the end of the day.
Yeah.
Any way you slice the bread, like, because you're going to pay, nothing's free in life.
Right. 100%.
You're going to pay either which way, whether I'm paying a rent or a mortgage, they both annoying as fuck. Like, it's like you see money in, money go out,
Yeah.
right? But I'd rather have the mortgage debt because that's a tool for me to build wealth. So if I'm paying that, essentially I'm paying myself. I'm paying the bank, but I'm paying myself,
Right.
you know, with future wealth creation. So it's an investment at the end of the day.
Yeah, that's how I would look at it too. So I would definitely use it for. That's what I'm saying. If it looks nice, I could film wherever I want. I ain't got to worry about certain things being in the way, and so on. So, yeah.
Yeah, like it's a beautiful thing, man. But I just want everybody to, you know, who's watching this, and make sure you like this video, share it with some people. How many people we got on here? We got over 250 people on here right now, and we don't have enough likes on this video. So if this was some good information that you just learned in the first 25 minutes of this video, do me a favor, like, comment, share, subscribe, hit the bell for notifications. Let's make this channel the #1 real estate channel in the planet, because I give you real information, no fluff. All right? Real information, no fluff. And thank you very much. Are we taking calls today?
Calls.
Yeah.
I guess.
Tooks don't want to take calls.
No, I mean, I didn't know he was doing that.
I mean, we never know what we're going to do. We just got to always be prepared for everything in life. But if you think this is good information, drop some gems in the comment too. All right? Did you know about the escrow account prior to this conversation? Do you understand the escrow account? Do you have any questions pertaining to the escrow account? Right? Let me know in the comments. Maybe instead of taking calls today, next week when we get back from Houston, Tooks, we got to get back to the calling show, because I want to take calls.
Yeah, we could do that once we get everything set up.
Everything is set up already.
When we get the other stuff we need.
So y'all should be pointing the Tooks will put the camera on him, right? Because y'all complain about me on the phone, but this whole 25 minutes, all this guy's doing is on the phone, right?
I just picked up my phone.
Nah, bro. The whole 25
sidebar. I just picked up my
this
phone.
Guy's always on the phone lately, right? He's Mr. Big Podcaster now. He got all these interviews lined up.
This
He's
has
always
nothing
on
to do
the
with
phone.
Interviews. That has nothing to do with interviews at all.
This guy's always on the phone.
That has nothing to do with interviews at all. There's some stuff going on behind the scenes. Yo, my guy Sean is in here. My guy Sean is in the building.
Shout out to Sean.
He's the one who helped me out with the Forex stuff.
Okay, shout out to Sean. Yeah, I heard Sean had a nice little teaching session with you.
Yeah, definitely.
For free.
Yeah, I really appreciate that.
Shout out to Sean. Drop some gems in the comment for Sean.
He asked if you can explain more what an escrow is. Please use escrow account. It saves you in the long run.
Yeah, I mean, look, I like, it depends, right? Because there's properties that I have that I don't escrow, and I have to manage my own property and taxes because those are investment properties.
Wait, hold on. See, that's where you lost me. What do you mean you didn't escrow?
All right, so let me explain this to you. When you're doing an FHA loan,
okay,
you have to escrow.
You have to escrow.
You have to escrow. You don't get an option.
Got you. So what do you have?
When you do a VA loan, I'm going to break it down for you. When you do a VA loan, you have to escrow. You don't get an option. When you do a conventional loan, depending on the lender and how much of a down payment you're putting down, I believe if you put down less than 20% with most lenders, they're going to require you to escrow. Some might be 15%. Don't quote me on this, but it's between 15 and 20% that you have to escrow. Once you get above that threshold, you don't have to escrow. They give you the option of, do you want to pay your escrow on your own, or do you want us to manage it? If you choose to pay the escrow on your own, there will be a fee. And usually they'll charge you a higher interest rate, slightly, 0.25% higher, 1/8 of a point higher. A bank may charge you a $2,000 fee for it. Who knows, right? But you're going to pay something for you paying your own escrow, because it's more of a risk to the bank of you managing it, right? When you're doing non-QM loans, you have the option of, non-QM is non-qualified mortgages. That means it's not being sold to Fannie Mae, Freddie Mac, Ginnie Mae, right? So when you're doing non-QM, those are portfolio loans, and you'll get the option of escrow or not escrow.
Okay.
and and most non-QM loans, LLC loans, and
Yeah.
investment loans fall in that category. So you have the option of not escrowing. Like commercial loans, for the majority part, is no escrow as well.
So it's all four, or it's just the two, taxes and insurance, or it's principal.
Typically, if you're not, no, principal and interest is always.
So then it's taxes and insurance.
It's the T&I. Correct.
Right.
It's always the T&I. The T&I, you get the T&I is all you get the
option to
exactly
right.
Whether you want to escrow or not. But for FHA, VA, first time home buyer type of programs, escrow.
Now, what if you decide to do it on your own? Is there more maintenance? Like, because technically,
you have to pay your bill.
So you got to be. So when those letters come in, you got to be on top of that.
You got to be on top of it. You got to pay your bill.
Okay.
And if you don't pay your bill, and the bank will monitor it.
And then they'll foreclose your house.
100%. If you don't pay your homeowner's insurance, they'll do what's called a forced placed insurance, right? And they'll just buy their own policy to protect them, and you have to pay them back for it. And it's going to be probably double of the price.
Damn.
Because it's a forced placed insurance policy.
Has there been any situations where people don't check their mail and they're like, oh, why didn't?
Yes.
How many months does it take for you for them to foreclose if you miss?
Oh, it's not months. It'll probably take a year or two in this market.
Oh, damn. So I'm sure there's...
Oh, yeah, they're on it.
Yeah.
They're monitoring. So they have a whole department, things in technology now, to monitor all the non-escrow accounts and seeing what's up with these tax bills. Are they getting paid on time?
Damn. Is that the same as not paying your taxes? Like
your income taxes?
Your income taxes?
No, that's totally different.
So
income taxes to the IRS.
Okay, so this is just like you just...
This is to the county, Nassau County, Suffolk County, Town of Huntington. You know what I'm saying?
Yeah.
Oyster Bay, Town of Hempstead, Queens County. You're paying them.
Right.
Yeah.
Okay. I learned a lot today, man.
And we freestyled this. And this was a freestyle. Damn, drop some gems in the comment for MG. Because I'll be honest with y'all, we don't be knowing what we're talking about.
So wait, hold on. So what's the difference between an escrow account and what Nipsey was talking about in his song?
The escrow accounts that he's talking about is like basically in your bank. You put in, like, lawyers will have escrow accounts, right? So when you're doing real estate transactions, if you're giving your down payment money to the attorney, they're putting it in an escrow account, right?
Okay.
And that's just an account where they hold customers' money.
That's it?
Yeah, basically.
Okay. So
it's not there. It's not that escrow account is separate from their operating account.
And why is that a flex?
Why is that a flex? Is because, look, I'm doing different types of business deals. So we throwing money in escrow accounts because we closing deals. You know what I'm saying?
Okay.
Like, so if I'm going to buy a house, like I just went into escrow. That means I just deposited money into escrow because I'm in contract to buy a house.
Copy.
It's a flex. We ain't dealing with savings and checkings. We dealing with escrow accounts, player. We closing deals.
That's dope. I always went over my head, but I always wanted to know what that meant. I just looking it up, to be honest.
Well, this is what we're here for, Tooks, is to give information for the people to learn from and be able to go out here and execute on their real estate goals. But this is a very important conversation. And this is a conversation that's not had a lot.
Yeah.
Because when you think about the whole real estate landscape, especially online, everybody's running a play.
Yeah.
It's always run the play, which I'm all for running a play. Let's not get it twisted. I love running a good play. But you have to understand there are pros and cons to everything. And not everything is going to be fucking a bag of gold at the end of a rainbow. You know what I'm saying? Like, there's real life situation. This is a real life situation. This is why I always say, too, maturity. And I say mindset, because you have to go into the mindset of ownership. Like, you got to go into this mature, like, disciplined, being able to pay your bills. Like, if you can't pay your Sprint bill, what the fuck makes you think you can pay a mortgage?
Yeah.
Hello? You don't even pay your goddamn light bill on time.
That's a fact.
You don't pay your Sprint bill on time or your Verizon bill on time. You don't pay none of your bills on time. They're all late. What makes you think you can afford a house? Because those bills come 15 days before the due date.
What, mortgage payments?
Oh, I get my mortgage. Well, my mortgage, I get alerts, bro. That alert come. Like, yo, pay your bill. It's due, coming up.
Damn.
This is real. This is no joke. So you got to understand, like, everything that comes along with this. And you got to understand, like, your $2,000, $3,000, $4,000 mortgage payment will increase at some point. It will go up. This is just real life. This is what happens.
Yeah.
And there's nothing you can do about it.
Nothing you can do about it.
No. You chose this life. You chose to come to the dark side. Why do you think when I say welcome to the dark side? It's the gift and the curse, man. And it's important that we just don't speak about all the good all the time. It's important that we speak about what are the cons of this, because people just truly don't know none of this information. You just hear, yo, I need 3.5% to buy a house. They don't talk about closing costs. They don't talk about the maintenance. They don't talk about the utilities. No one talks about none of this stuff.
I think I'm more interested in how people are paying for this stuff.
They got jobs, man.
Yeah, but I don't know. It's like,
what do you mean you don't know?
There's some people I know who own houses, and I'm just like, how are you? What? Like, what are you doing that you are able to afford this? And especially out here, it's kind of interesting. So, I mean, that's what I'm more interested in, finding out how people are making this money to be able to afford 2 homes, keep up with payments, have kids. You know what I mean?
You do what I do, because you just like, you do what I do, bro. Run your play.
Yeah.
Every single day.
People are running plays though.
Huh?
I don't even know if some of these people are running plays.
Nah, I mean, people can afford it. Let's not think like everybody's broke. Not everybody's broke.
No, 100%. I'm saying some people that I know that own. I'm just like,
how do they afford it?
Like, really? You got a crib? Interesting.
Yeah, because they running their plays, bro.
Yeah.
People got more money than you think. Let's not get it twisted. Not everybody's spending their money.
I said the people that I know that I saw. I'm not talking about just everyday like random people. I'm saying like people I know.
Well, that's why I'm telling you that the people that you know got more money than you probably think.
Or there could be something else going on, or they could have somebody else pay for it. I don't know.
This is not rat TV, Tooks. Okay.
What you mean it's not rat TV?
We don't talk about what other people are doing.
I'm not saying no names.
We don't even.
I'm not saying no names.
We don't even think about it. Not on this channel. Okay. What people do is what they do. What people do is what people do. If people want to do people shit, let them do people shit.
Yeah.
That's
a fact.
All day. No problem. Go do your people stuff, ladies and gentlemen.
That's a fact.
We don't
dual income house. See, that's what I'm saying. Some people will say like, "Oh, they're doing it by themselves," or they say, "It's like, no, I don't know, bro."
Yeah, people. I mean, dual income. Look, and this is why some people are miserable in their relationships, but they stay just because they need the other source of income. But this is why I also always say too, one stream of income is too close to being broke.
Yeah.
Like, you really have to figure out, how do you make more money? I don't care if it makes you another $200 a month. That's a bill.
No, that's a fact. No, I was looking at the comments. It's pretty funny.
What was funny?
You see the comments?
Nah, I can't see it. I mean, there's a little ass fucking.
Oh, you don't have you don't on your phone checking the comments? Look at this guy. You talking about me on the phone? You're not even. Look, see,
yeah,
look at him.
I'm doing other things right now. I'm doing other things right now.
Caught him.
Something else came out real quick. Something else came out. But what was the comment?
Took saying the trap bumping.
Word. Took's over here, like, you know what I mean? Like, trying to set these people up for failure real quick.
I wasn't even talking about all that. I was just saying, like, people, like, dual income, basically.
Nah, you know what I actually was looking at? To make sure my storage bill was paid.
Oh, see, you guys got a witness right here.
What? What was the witness?
Oh, I'm the witness.
The witness of what?
Of you not paying your bills on time.
No. This shit was paid on the 4th.
Oh yeah.
I didn't see when we was talking about paying your bills and everything like that. I seen all the other things that came out this month, and it just reminded me, like, yo, did my start? And I look at the day, I was like, this is 7-Eleven.
This is what you sound like when you're on the phone with customer service, explaining to them why you want your
But thank God for auto pay.
feedback.
Thank God. Thank God for auto pay. Okay?
Yo.
and look, just in real talk, it says, and I'm looking at an email because I got to search public storage, right? On June 12th, they're talking about your upcoming storage payments are coming for August. On July 12th, I'm sorry.
Mm-hmm.
Like, come on, bro.
Yeah. No, that's all right. I mean, auto pay works though.
Yeah, but sometimes you got to make sure, man. Like, and it just, $328 was paid on July 4th. Like you gotta make sure, bro, because
I don't make sure.
No, I'm gonna definitely make sure. I got a lot of stuff in storage.
Oh, okay.
And I had a little fucking couple months ago, like a little.
I'm just trolling you right now, bro. You ain't
I don't care. I'm explaining it because I'm like, yo, niggas almost sold my shit. Like,
word?
You don't remember when we had Ramel on here, and I was talking. That's why I was so pissed off.
Yeah.
And I'm like, yo, wait a minute, because these fools, like, the card expired that I had on the auto pay, and I didn't even realize for the storage thing, and it was not even 30 days late. It was like in the middle of the month, and something just told me like to go check my account or whatever the case may be, and I saw that it wasn't paid, but I had an alert on a joint talking about they gonna auction off my shit.
Damn.
And I'm like, yo, that's crazy. So I paid a couple months up front. When I saw that, I was like, you know what? I don't even want to. I put the new card in, and I put like 2 or 3 months up front. This was like 3-4 months ago. So that's why when we was just talking about that right now, it triggered me in my head. Like, wait a minute, did I see the public storage go through? Let me check right now. That's why I searched my email just to make sure.
Customer service phone calls to see phone with you.
Yo, hey, we all go through it, yo.
Yeah,
I ain't exempt.
No, 100%.
Like, ain't nobody exempt. Yep. On August 1st, it comes out the next one. So like, ain't nobody exempt for missing a late payment and stuff like that. That shit is like, that happens, yo. Like, I know some rich people that miss payments, not purposely or intentionally. It's just like, yo, sometimes things slip when you think it's on auto pay or something like that.
Yeah.
Like, think about if you have a lot of credit cards, sometimes something might go through some fraud activity. You got to shut that card down. Like, shit happens, yo. And if you're busy and you're moving and shaking and you're managing multiple different things, like, yo, you got to make sure, like, yo, like, even for my mortgages, everything's on auto pay. But I make sure.
Yeah.
Because it'll just be that one time that something come up and you ain't thinking about it. And the next thing you know, you got a 30-day late on your credit report and your credit drops. And you now got to fight with them to get it removed because of something they may have had an error on.
Yeah.
You know, like, that shit happens, yo.
I know in my head, I know when my car payment comes out, I'll be like, yeah, nah, I got to make sure I check to see when it's coming out just to make sure it does. And yeah, that's a priority to me. It's always been bigger payments like that. So.
Yeah, you have to. You have to. And again, and we're speaking about, this is financial management.
Yeah.
You know what I'm saying? This is the discipline. You have to make sure that you understand about your escrow account. You have to understand about your homeowner's insurance. You have to understand about the bills that you are signing up to pay. We all are signing up to pay debt at the end of the day. We have to be responsible enough to pay them. And just because the technology affords us a little more flexibility, you still have to personally go through your bank statements, your credit card statements, however you're paying it, to ensure things are still being paid. Because at the end of the day, the technology can have a glitch, something can happen, and if that thing don't get paid, guess what? They're going to report your ass. Even if it's their fault. You 30 days late, they're going to report you.
Yeah.
I've seen this happen so many times. It's happened to me, where it's like, dude, it ain't even my fault.
Yeah.
It ain't even my fault.
They don't care, though.
No, they don't give a damn.
They don't care.
But now your credit score just dropped 100 points plus because of something that wasn't your fault. Or it was your fault.
Yeah.
Right? Because technically it really is. It's your fault, but it's my fault because I wasn't following up. So,
yep. I've been there.
We all been there.
I'm still going through it. Like I was saying to you before we got on.
Yeah.
Dealing with that nonsense.
Shit happens.
Yeah.
No one's exempt from the shit happening.
Yeah. No, 100%. Even when you think you're doing things right, it's like,
Things happen.
it's like, damn, I didn't even know that.
No, things happen. Like, we're human, y'all.
Yeah.
Like, I don't care how much money somebody has. We're all human. We all make mistakes. We all get busy. We all do something where we forget.
Yeah.
And it could be the smallest little thing. And that thing could wreck your credit. And it's like, damn, yo.
Yep. That's what I'm going through right now.
Like, damn, yo.
Damn.
Like, why didn't I do this?
Well, I had no control over it because I lost my job. So somebody mentioned, MG, I have late payments on my credit, but I have a 700 plus across all 3 bureaus after rebuilding. Is it going to affect me being able to secure a mortgage?
Say that again.
Yo, MG, I have late payments on my credit, but I have a 700 plus across all 3 bureaus after rebuilding. Is it going to affect me being able to secure a mortgage?
How, if the payments are over 12 months, no.
Really?
If it's over 24 months, definitely not. But if it's late payments on mortgages, then it could potentially hurt you because you have a history of not paying your bills. But again, seasoning. Remember we talked about seasoning the other day?
Yeah.
Once you hit a seasoning, depending on the product and the program, there's a seasoning guideline for late payments on mortgage, late payments on anything else. So some products will allow for you to have one late payment on your mortgage. Like even on your mortgage, you can have one late payment in the last 12 months, a 30-day late, right? It's called 1 times 30, right? So 1 times 30 times 12, right? So that means you got one late payment, one 30-day late payment over the past 12 months, right? But then that will, and if you've been on any of my classes, shout out to all my people in Learning Center. We got a class in 30 minutes, by the way. But I show you how to matrix and I show you how to read them. So now that would take you from one bucket of matrix to lower, and that means you'll get a higher interest rate because of your late payment. So it shouldn't hinder you, especially if they're older payments. But it sounds like it is because they have over 700 credit score right now. So it sounds like it was older, so they should be fine.
I think what I learned I was like 2 weeks ago, I had somebody, I had a finance manager on my podcast, and he was saying that the credit score isn't as important as people make it. It's more about payment history and what's on your credit. Like they want to see if you've had cars in your name or if you paid them off. You can have a good score, but if you don't have any, like for me, like I have 1 credit card. So I know I should have had more, you know what I'm saying, in order for me to get approved because I paid off vehicles before. Mm-hmm. So I think payment history is definitely what's more important.
Yeah, man. Payment history is very important.
Or credit history, I'm sorry.
And credit history and payment history.
Right.
Equally as important, both of them, right? So most people think, yo, my credit score is at 780. Okay. I deserve the best of everything.
Yeah.
Okay. No, you don't.
Yeah.
Because if you only got a fucking $2,000 credit card and you try and get 500,000,
yeah,
your credit report is your report card.
Yeah.
Your credit report is your adult report card. It's basically telling banks who you are and how you manage your debt.
Facts.
So if you don't have a lot of debt, and it's ass backwards to be honest with you, because you would think like if you have no debt, then you should be, a good borrower.
That's what I always thought, because I'm like, yo, I don't have a crib. I have a car, but it's a lease. So like I don't, you know what I'm saying? Like,
but we don't care about that.
Yeah, I know. So I didn't know that. But
I mean, a lease helps. It's a trade line, right?
Yeah.
So it's an active trade line, but we want to see more revolving debt. We want to see more installment debt. We want to see multiple trade lines, right?
Yeah.
So it's good to have credit cards open. Just manage them properly. Like people would talk about credit cards like it's the devil, right? It's only the devil if you mismanage it.
Yeah.
It's like people say money is the root of all evil. I disagree with that because you was who you was before you got here.
Right.
I firmly believe that. So if you was evil before money, you're going to be evil with money. If you're a good person with money before money, you're going to be a good person after money.
That's true.
I firmly believe that.
Yeah, same.
So it's not the money who's changing you. It's you that was just you. Now you have the confidence.
Right.
to change and be an asshole now. All right. So credit is one of those things where it's a tricky, finicky thing, and any little thing can kind of bump your scores down.
Yeah.
But the way you can bump it down is the way you can bump it back up too. So even when I tell people you have low credit scores, all right, what's keeping it low? Figure that out.
Yeah.
And most of the time, it's just pay your bills. I say all the time, the best credit repair is pay your bills.
Mm-hmm.
Pay your bills. And then when you get your bills paid off and your scores start building up, you get to a certain level, get yourself some credit cards. Get trade lines on there. I don't care if it's a $500 freaking secured card. Use it like a gas card. Use it paid off. Use it paid off. Rebuild the relationship with the banks, because all of this is about relationship building, right? Like if I came to you and say, yo, Tooks, I want $500,000 from you. I got a 700 credit score, but I got a $5,000 credit card. That's it. Would you want to lend me $500,000?
It's tough. I get what you're saying,
but would you really want to lend me your $500,000?
If I didn't know you?
Yeah.
Okay. No, but if before this conversation, I would have said yeah, because I'm like, oh, I know you got money, you know what I'm saying? But then if I don't know you, then you know.
But you can say, yeah, you know you got money, but what if my credit report is shit?
Oh, if it's shit, then yeah.
Exactly my point. Right.
So it don't matter how much money you have.
It doesn't matter.
Yeah.
What if my history of paying back debt is shit? I can still have money, but I have a terrible habits of paying late and not paying on time. Now you got to chase me for your money.
Yeah, definitely don't want to do that.
Exactly my point.
Yeah.
So you got to put yourself in the lender seat as well. When you're out here looking to borrow, you got to ask yourself, would you lend to yourself?
Would I lend to myself?
In the chat, please.
That's a good way to look at it, though.
In the chat, please. Would you lend to yourself? Be honest with yourself. Would you lend money to yourself? Would you lend yourself $500,000? Would you lend yourself $750,000? Would you lend yourself $300,000? Be honest in the comments. Yes in chat or no? Yes in chat or no?
Yeah. It's a good way to look at it.
You got to look at this like that, right?
Yeah.
Would you lend to yourself?
So what happens when you get into a situation that's like older and, you know, people do change, you know, with time comes, well, hopefully comes more knowledge when you learn and you learn from your mistakes. So they're going to base whatever you've done in the past, you know what I'm saying?
Yeah, but it's a seasoning thing, right? So if you got hiccups 6 years ago and you cleaned up your act in the past 3 to 4 years,
yeah,
then okay, I can give you a chance because it's like you rehabilitated yourself.
Okay. Yeah.
Like I always didn't have good credit. I had shit credit. I had shitty credit multiple times in my life. It happens.
Yeah. I had better credit when I didn't even have a job. Isn't that weird?
No, it's not.
Because like when I didn't even have a job throughout all my 20s and I was dancing and all that stuff and I had like BS jobs, I had like pretty decent credit. I was like 740.
Okay.
Like one credit card somehow. But like it's crazy. I don't get it. It makes no sense. And now, you know, I make money and because of whatever happened during COVID, it's like I'm still being penalized for that.
Well, it's fresh. It's new.
I guess.
You got to rebuild, bro.
That's what I'm doing. But
that's it. You just got to rebuild right now.
Yeah.
And it's a process and it takes a little bit of time, but as you rebuild, you'll be all right. You'll be good.
Well, that's what we're here for, to learn.
Yep, ladies and gentlemen, that's what we're here for. How long we been on this for? Because I got to go to class.
54 minutes.
54 minutes, and we said we was going to be on here for 45 minutes tops. Okay. Yeah. So we had a good conversation today. If you learned something today in this conversation, please put some gems in the chat. I thought this was a good conversation. We talked about your escrow account and why your mortgage payment will go up. We broke that down into details. And then I don't know how we got into this other conversation. Well, it all tied in with the credit and being responsible.
No, this is a really good conversation.
Yeah.
We stayed on topic and we stayed, you know, it was relative to real estate. you know.
Yeah. Make sure everybody go download Rants and Gems podcast, please, on audio. Go download Rants and Gems podcast. We're going to start uploading a lot of the audio on Rants and Gems from this channel. And we gotta, when I get this branding from Tukes, then we can kind of announce some other things. But just make sure you guys go download Rants and Gems for daily real estate education. That is my podcast, and we're going to put a lot of information on there. So I want you guys to stay tuned and stay tapped in to the audio of what we do as well. All right. We want to be the #1 real estate platform in the world. So download, support, leave a 5-star review. If you like the YouTube channel, go download Rants and Gems and leave a 5-star review. Make sure you guys, how many people watching this live right now? Because I can't see it. I know we got 220 or something like that.
I don't know if it says 266. It tells me on the switch.
266. So we got 266 and we got like 100 and something likes right now. Make sure you guys like this video. Throw some gems in the comments if you got value from this video. And if you are in the Houston area, this Thursday, I'm going to be at Bar 5015. We're having a real estate professionals networking event. So I want you guys to pull out. It's from 7 p.m. to midnight on Thursday. The Houston Real Estate Masterclass that's happening this Friday and this Saturday, July 14th and July 15th. We only have 3 seats remaining. So you can go to mgbookstore.com and get your tickets for that. And also, the books is all the way over here. I don't feel like reaching over there. Pick up some books while you at it. After Houston, we'll be in Philly on July 27th and July 28th. We have 10 seats remaining for that class. You can go to mgbookstore.com and pick up your tickets today. All right. So pull up on me, H-Town, Houston. I love Houston. I'm looking to have a good time. While in Houston, I want to meet all the real estate professionals, realtors, loan officers, appraisers, home inspectors, title companies, investors, wholesalers, financial service professionals, whoever you are. If you're aspiring to be in real estate, I want to meet you. Let's shake hands. Let's exchange cards. Let's break some bread in the future. All right. We out of here. Matt Garland, NMLS number 58700, or better known as MG the Mortgage Guy. Peace.